Let's now understand the meaning of transfer. Now, transfer is defined in section 2, subsection 47. But before we see the technical side of it, let's see what is the relevance of transfer. Now, for income tax purposes, let's say this person is the owner of a capital asset. Okay? And there is another person who's there. Now, capital gains are what? Capital gains are the gains which are earned by this person on transfer of a capital asset. Now, what is the meaning of transfer? Transfer basically does not necessarily means allowing the use of. That is not transfer. Transfer means there is actually a separation of ownership of this person with the capital asset. This is a common meaning. For income tax purposes, you are specifically told as to what are the various things which will be construed as a transfer for capital gains purposes. Okay, let us see these things. Transfer includes. Now, this means that this is an inclusive definition, which means that beyond all these points that we are discussing, in fact, some of them may not be in the section also. These are some which are kind of generated for otherwise also. Even other cases may be treated as a transfer. So transfer includes sale of an asset. Sale we know very well. So I give you an asset. You give me money. That is sale. Exchange. I give you an asset. You give me in turn another asset other than money. Relinquishment of asset. Relinquishment basically means giving up. Right? Extinguishment of any right on asset. So let's say there were two people, A and B, okay, who were owning a particular asset. But A, because of certain reasons, had agreed with B that if I am not able to fulfill certain work, then my right in this asset will go away. They will extinguish. Right? So extinguishment of any right in asset is also considered as a transfer. Compulsory acquisition of asset under any law. Again, you must have been hearing a lot about acquisition of land. There are so many disputes which are going around everywhere in India, where land acquisitions are done and the farmers and everyone who are the affected parties kind of try and go to object against it. But even in cases where there is a successful acquisition of an asset under any law by the government or their agencies, that is also a transfer. This means what? From a farmer's perspective, okay, let's say this is the farmer, even if his assets is transferred and acquired by the government, if he receives a compensation which results in capital gain, he has to pay tax. Why? Because even this transfer, even though compulsorily done, is considered as a transfer for income tax purposes. Conversion of a capital asset into stock in trade. So let's say, for example, okay, for this one I'll just take a new page. Let's say there's a person A. He is engaged into private trading. Private trading means what? He purchases and sells shares. Since it is a private trading, for him, these shares are a capital asset. But suddenly he realized, why should I not run a business of trading in shares, where I'll do it on my behalf as well as on behalf of the customers, because I'm very good at it. Right? So what he does is, this capital asset, this share, he contributes to his business and he treats it as a stock in trade. For a person who is engaged into the business of purchase and sale of shares, share is a stock in trade. Whereas for an individual who's just doing private trading, this was a capital asset. So when you convert a capital asset into stock in trade, that is also considered as a transfer. There's a specific provision for how you tax it, which we will see subsequently. Maturity and redemption of zero coupon bonds. Again, we'll see this thing in detail. Transaction which involve allowing possession of any immovable property in part performance of a contract referred to in section 53A of the Transfer of Property Act. In these cases, what happens is, let's say for example, there are two people, okay, A and B. These are also at times referred to as the power of attorney kind of transactions. So what happens is, in this case, A sells, let's say, some land to B. B gets the ownership. He acquires all the rights of owner in this land. It's just that the legal transfer has not been done. These kinds of transfer are dealt with in section 53A of the Transfer of Property Act. So in such a case, when A does all these acts, it will be treated that A has transferred this land to B, and any profits which A gets from such a transfer will be taxable under capital gain. And the last is allotment or lease under house building scheme of the company, society or other association. Again, in this case what happens is, there are builders who will make a residential apartment. There will be various flats which will be built in this apartment. The ownership of a person who acquires a flat here is given through the membership of a society. So what happens is that instead of, continue to be the owner of this flat, you have to be a member of society. And many a time this is transferable. Right? So in such a case where you transfer the membership of the society, that is also a transfer. And therefore, whenever you transfer this membership and you get money, so it is seen what is it that you have paid to get this flat, what is it that you get after selling the membership, and the difference is taxable under the head capital gains. Again, before I close on this slide, I'll tell you one of the crucial things that, transfer is a must. If there is no transfer, there is no capital gain. So we will see a section which will say that, okay, A, B, C, D, these four transactions are not regarded as a transfer, which will mean that if there is no transfer, there is no capital gain.